that narrative has changed. It was about credibility and stability, and I think you've got that back in the market. Don't get me wrong, the backdrop is still not a hugely positive one for the UK, you know, with inflation that we saw yesterday over 11%, and the focus around, as you alluded to, that austere nature is going to be around that impact on growth. And so I think it's very hard to be, you know, outright bullish the pound, you know, until we get further clarity around some of that data, around that growth, and around the broader sentiment of the market.
Yeah, it's interesting. I mean, just to look at it against the dollar, we've sort of fought our way back close to 120. And that looks like another important level here. Is there the potential before the end of the year here for us to breach the 120 mark, do you think? Or too many negatives, as you point out, around the economic data? I think sterling against the dollar has been a dollar trade. You know, I think we've seen consistent dollar outperformance since the breakout of war earlier in the year, and you've seen a sort of reduction in those positions, not just against sterling, but more broadly. The dollar has, you know, given back some of its gains in recent weeks quite aggressively, and volatility remains quite high, which is actually surprising considering usually in the dollar sell-off backdrop is more a risk-positive outlook and a lower volatility environment. But, you know, we are still seeing high volatility remain, but against the dollar, it's very much the dollar trade, and back to the Fed and the pace of that hiking cycle. So I think that's more driven. So that's interesting. So it's still very much interest rate differentials that are determining levels at the moment. To a point, and I think it's sentiment and positioning has been a huge part of it, of this move more recently, and the market don't want to be caught on the wrong side of the change, of the pivot, to sort of coin the overused phrase. But just looking at how much conviction. I mean, volume is often a good indicator of conviction on a move. What is it saying to you at the moment about the market's willingness to participate?
Yeah, I think so. The volumes we saw after the mini budget, you know, were 200 to 300%, so 2 to 3 times more than sort of the 90-day average, and volumes still remain quite high, but participation rates are a little bit lower. So although there's volume going through, it's more risk reduction than it is, you know, risk additive, if you like, or, you know, people having to do trades, topping up hedges, etc., rather than new addition of risk.
You pointed out, I think, what a lot of us have been focused on, that a lot of this move against major G10 currencies has been dollar-focused, and it's been dollar against everything. As you look at the pound against, say, the euro, we've not seen quite the same size of move, but there has been, I think, a bit of modest outperformance by the euro. What do you think we see from here on in? It almost feels like a race to the bottom in growth terms.
I mean, look, both outlooks are not particularly positive. You know, both Europe and the UK have suffered from huge terms of trade shock, obviously, and so it has been very much a one-dimensional dollar trade in that respect. Euro sterling, I think, is likely to stay in a relatively range-bound for the foreseeable future, due to the fact of the broader outlook are impacting both, whether that is the Fed and the pivot, whether that is China and broader growth, or whether that is the war and you know, the developments of that.